Welcome. This is where we're going to go over multiple lender products with multiple different lenders. We're going to take a deep dive into how these products work and how they work for you and why they work for you, who they're good for, all of the good stuff. Let's get started. Today's special project is DSCR loan. This is a debt service coverage ratio loan. And you know what? Normally, you guys, we have a lender that comes on to do these. And the account executive from that specific lender comes on to do this. But today I'm going to mix it up a little bit because I have a very special guest who is actually out of 2,800 plus loan officers. She's charting out in the top 10 here at Nexa Mortgage, and she does pretty much nothing but DSCR loans. So we are going right to the horse's mouth, directly to the source, seeing exactly who does what, why, and when. Lizzie Lopez.
Lizzie, why don't you start off by telling us what is a DSCR and who does it serve?
Thanks for having me on, guys. So yeah, DSCR stands for Debt Service Coverage Ratio. Like Doug mentioned, the basic gist of it is, does your rental income cover your mortgage payment? Yes, this is an investment property product. So it's only for those rental properties. We can do these as long-term rents or under a short-term rental umbrella. You do not need a job or income to get into this loan. If you have decent credit, you have the down payment, and it cash flows, you can get into a DSCR loan.
Okay, so you said that you don't have to have a job or income to qualify for this loan. So you're saying if I am sitting on some equity with my primary residence, which a lot of Americans are right now, I can basically use that equity to cash out and acquire another property. And of course, I'm talking about an investment property that I currently have that's sitting on a mountain of equity, but maybe I lost my job from 2015 where I had a job and I bought my house and my investment property. You're saying I can tap into the equity at the investment property, buy another property, and maybe even rehab that property and do it all through this loan that I don't have to qualify for?
You don't have to qualify with your DTI. So we're not going to ask about your W-2 if you filed your tax returns. This is not DTI driven whatsoever. So yes, you can tap into that equity. You can buy other properties with it. Absolutely. Now, there are no renovation funds with a DSCR loan. Some people get confused with that. This is a long-term financing loan, typically a 30-year fixed principal and interest loan.
So Lizzie, how many properties can you buy with a loan like this?
You can have unlimited DSCR loans. Now, each lender has a limit. Some lenders are limited at 20 loans. Some are a loan amount, so maybe 3 million on the loan amount. But once you tap out on that, you can go to another lender. And plus, I typically tell people, let's just spread the wealth around. Let's not go to the same lender. A lot of these lenders have the same pricing. So unless it's particular to that lender that we have to go there, let's try a couple different lenders if we have more than one loan to do.
So you mentioned that this is qualified by rent. Who determines the rent amount?
So with the DSCR, we get your regular 1004 appraisal done. We also have an additional form. It's called the 1007 market rent analysis. The appraiser completes that. So the appraiser is going to be telling us what is the long-term rent for that property. We can also do it with short-term rentals. Now, lenders work a little different with the short-term rentals. Typically, they're going to pull the AirDNA to see how that property performs on AirDNA. They want to see 60 to 70% occupancy rate. There are some lenders, though, that go strictly off of the AirDNA, and it doesn't really matter what the appraiser is putting on that 1007 as far as short-term rental comps, because the appraiser has to put short-term rental comps on the 1007 when we're looking at it as a short-term rental.
Okay, so you're saying that this is good for like a long-term rental or an Airbnb, right?
Correct. Yep. So I typically tell people, let's look at it from a long-term rents perspective first, because short-term rental, a lot of these lenders will limit your loan to value by 5%. So you won't be able to get max financing if we're looking at it as a short-term rental. What does that mean? That means on a purchase, instead of bringing 20% down, now you have to bring 25% down when it's a short-term rental. There are a couple lenders, though, that do not limit the LTV, the loan to value. So we always want to look at it from a long-term rents perspective first. Does it qualify as a long-term rental? Like I mentioned, the appraiser is going to tell us what the market rent is when they fill out that 1007 market rent analysis form. All the lenders work a little different when it comes to the 1007. If there's a lease agreement in place, some of the lenders will use the lease agreement. If it's 120% more, they'll use up to 120%. Some of them will actually use the lease agreement over the 1007 as long as we have 2 to 3 payments. So as long as we have, first and last month's rent and security deposit verified, Some of the lenders will use the lease over that 1007. That's for long-term rent. Short-term rentals, like I mentioned, the lenders pull Air DNA on the paid version. There's a button on there, projected rental income. That's where they're going to look at to see, does this perform well as a short-term rental? Is the occupancy rate between 60 to 70%? If so, okay, this looks like it'd be good. Let's go ahead and get that appraisal ordered. And then we want to request that appraiser puts short-term rental comps on that 1007.
You mentioned that you don't need, there's no income requirements for this. What about credit score? Is there a minimum credit score that you need?
Yeah, so there's a big misconception out there in my real estate communities that we don't pull credit on these loans or that they're non-recourse loans. That is incorrect information. Out of the over 90 lenders, DSCR lenders that I have at Nexa, they all require some type of credit pull. Most of them, it's going to be a hard pull. A couple of them actually do the soft pulls. And the minimum credit score is 600 with one of my lenders. We go up from there. There's some lenders at 620. There's other lenders at 640, 660, 680. Some of them are 700. So one thing you got to know about these DSCR lenders, every one of them has a different set of guidelines. You can't go to one lender and then go to another and expect the same thing. Different minimum loan amounts, different credit score requirements, different seasoning off the MLS requirements, different seasoning for cash out. You know, some of them pull their own credit. Some of them use my credit report. A couple of them do soft pulls. So, you know, it's just all about finding out what the client really needs, the whole picture, and then placing them with the right lender.
Hey, Lizzie, perfect segue for my next question. So Nexa is known for being really rich in lenders. And I think we have about 90 that do DSCR loans. Given that you're a top producer at Nexa, how important is it to you that you have so many choices for DSCR loans, especially since you pretty much are only doing your DSCR loans?
Very important. I have a spreadsheet with over 90 of my DSCR lenders on there, all different tabs. So my background's in underwriting. So I have all different tabs, minimum loan amount, minimum credit score, you know, do they do short-term rental income, which most of them do? Do they report the loan in your personal credit report? You know, half of my lenders do and half of my lenders don't. Do they allow nested LLCs? People don't even know what it is. That's a layered LLC. So an LLC owned by another LLC. Half of my lenders don't allow that. You know, if you're a first-time home buyer, some of the lenders allow it, some of them don't. If you're a first-time home buyer and you live rent-free, now we only have a little bit of, you know, only a couple lenders that'll actually finance that property. So, you know, my spreadsheet is invaluable to me, especially with those loans like I mentioned, you know, first-time home buyers, living rent-free. You know, if you have a 3-month cash out refi seasoning and you don't want the loan reporting to your credit, you want to do a soft pull, you know, now I've only got 3 lenders that could do that loan out of 90. So it is extremely important that I have a plethora of DSCR lenders to choose from.
So correct me if I'm wrong, but if you were working at a place that only had about 2 or 3 different lender options for DSCR loans, you wouldn't be at the levels of success that you're at now, right?
No way would I be where I'm at now, because I'm able to do loans in almost every state. I'm able to do almost every scenario that comes to me, as long as you have the decent credit score, the down payment. You know, it's endless, the amount of lenders that I can go to. If I was at a retail shop, there's no way that I would have closed as many loans as I've been closing lately, especially.
If you could say there was like 1 or 2 misunderstandings that people have normally when they come to you for a loan like this, what would you say a misunderstanding would be?
Yeah, the first one is probably going to be, is this a non-recourse loan? I heard that these aren't reported on your credit report. I heard that we do these under your LLC. So yes, you can invest in a DSCR loan under your LLC, but that is just the ownership piece of it. We're still using your personal social security number. You are still personally guaranteeing these loans. That's probably one of the number 1 misconceptions out there, is that DSCR, you're not guaranteeing, it's under your paydex score. That is incorrect information. We're using your social security number. We are not using your EIN, your paydex score to do these loans under the credit piece wise. And like I mentioned, 99% of these lenders are going to be recourse lenders, meaning even if they don't report to your credit report, eventually, if you stop making your payment, eventually they will get to you on your credit report. It will be on there. It will be a collection. It will be a charge up. They will come after you for the money for this. Another misconception out there is that, the down payment funds can come from anybody and they can just wire their money over to title. There's so many, investment groups out there that teach people to have private money lenders, or basically other people that are going to be investing in your rental property. However, that person, if they're not part of your LLC, they have nothing to do with the transaction, they're not on the loan, money can't just be sent directly from them over to title. That's also a huge misconception out there in the real estate community.
So given that this isn't an income-based qualification, would you say that this is like a good start for like a generational wealth type of situation?
Absolutely. I mean, there's no job, no income requirements. It is strictly based off the cash flow of the property and your credit score. Your credit score highly drives the interest rates on these DSCR loans. But given the fact that, conventionally you're topped at 10 loans, you can't have more than 10 conventional investment property loans. And DSCR, you can have unlimited loans. So it's absolutely a way to build generational wealth. You can title these in, LLC. You can make other family members part of your LLC. You could title them in a trust to make sure, if anything happens to you, that it definitely goes down to your generational wealth.
All right. So, Lindsay Lopez, thank you so much for taking your time. I know you were very busy. And thank you so much for helping, the public, being buyers, realtors, and other loan officers out there know what's up with this product. If there was something you could give a short clip to our buyers that might consider this product, our realtors that might consider this product, or other LOs out there that might not be at Nexa, what would you have to say, short clip to all three?
Loan is easy, yet it is complicated, because there's a different set of guidelines from every lender. So make sure, we're doing your due diligence up front. You're covering all the little bases. As far as the buyer goes, please disclose everything to your loan officer, so your loan officer knows where to send you and sending you to the right lender. And I love me some DSCR loans. The interest rates on these loans are not very much higher than a traditional conventional loan, maybe a half a point for good credit borrowers. So I would say, why not give it a try? Go out there, find some lenders who, they originate these loans on a daily basis. If you don't originate these loans all the time, you can definitely run into some trouble because every lender's got a different set of guidelines.
So we are going to wrap up. I hope this has been helpful for you guys. If it has, please share this with your friends that maybe are looking to invest in investor properties, anybody that might be looking for a better solution, real estate agent wise, or loan officers that maybe don't have the plethora of products that we do here. Once again, Liz Lopez, thank you very much for attending today, and we will catch you on the flip side, you guys. Thank you.